Hi, I'm Joel Ronke, founder and managing director of Integrity Education Group, and today's video is about FASEA, the changes that are coming up in 2019, and just what the options are for people who are either in the industry or looking to get into the industry. We're just going to explore the different aspects. So it's a big change. Nothing's locked in yet. It's all proposed, as we know, but it's really around education. CPD, an exam, a professional year, all sorts of different things. And if any of these slides are cut off by my video down the bottom left-hand corner, I'll also be posting a link to the slides with the video, so don't worry. What we're going to do is we're going to run through the detail first, then we'll have a look at a worked example around possible options if you already hold a degree and a couple other scenarios. And then if there's any questions, always feel free just to shoot me an email at j.ronke@integrity.edu.au or call me on 1300 400 346. Or equally, if you call and speak to Jackie as well, she can help. So here's a quick overview of the FASEA landscape as it currently stands. Now, I'm not going to go through this right now, but this is all the detail that we're going to go through in the remainder of these slides. But the key to the whole thing is, are you an existing advisor or are you a new advisor? What's the difference? What does it mean? And what are the implications for your career in financial planning? So new or existing advisor. It simply comes down to the definition is simply derived from whether you're on the ASIC Financial Advisor Register between those dates, so 2016, 2017 or 2018. So the moment we're sitting in about July 2018, so there's another 5 months or so before people can get registered on the ASIC Financial Advisor Register. What's the benefit? What's the difference? Well, it's fairly significant. If you're already on the register, or you do get yourself on the register before the end of this year, you get a 5-year transition period to kind of get things in order, do some further study, sit an exam, all that kind of stuff. It means that the exam itself, the national exam, you have till 2021 to actually get that completed. So you get a 2-year window. Also, if you do have to do additional study, you get till 2024 to undertake additional study. Depending on your circumstances, it may involve a fair bit of additional study, or it may involve only one subject. Again, we'll go through that in more detail as we go through the slides, but it really depends on your background, your professional experience, and your current education levels. And importantly, if you are considered an existing advisor, then there's no need to undertake a professional year. So you've got a lot more flexibility in how you build your career and where you build your career. The new advisor, on the other hand, that's anyone who's on the ASIC Financial Advisor Register on or after the 1st of January 2019. Well, it's a different story. So there's more hurdles, there's more hoops you've got to jump through before you can get there. And they are quite simply this. You must first of all actually have attained a FPEC approved degree or postgraduate qualification. Who's FPEC? Financial Planning Education Council. It's made up of academics and industry, and they basically set the framework around what a higher education qualification should look like, what it should cover, the types of subjects. So they're going to put together a list of all these approved degrees and graduate diplomas and certificates and so forth, and masters. After you've attained either a degree or a postgraduate qualification, you then are able to sit an exam which you must pass. It's a national exam, and then also you must undertake a professional year, so a combination of work and study under supervision. How do you become an existing advisor? Well, it's pretty simple, as I've already said. You basically need to be registered on the ASIC Financial Advisor Register by the end of this year, if you aren't already. How? Again, pretty straightforward. Under the current legislation, it's still RG 146. It's still the Diploma of Financial Planning. If you get your Diploma of Financial Planning or any component of RG 146 that allows you to be registered on the ASIC Financial Advisor Register, then that will meet the requirements of the existing advisor. So you've got to become RG 146 compliant and find a dealer group. Find an AFSL holder who will take you on. But the trick here is you've got to be registered by the 31st of December this year, 2018, which means that it's about a 6-week process once you build in Christmas, so you really need to get started no later than the 9th of November. That is, you need to have picked a home, you need to have picked an AFSL or a dealer group that you're going to join, and you need to have signed up and started the paperwork, because you've got to go through police check, you've got to go through education checks, and then you've actually got to lodge it with ASIC, and ASIC's got to approve it, all by the 31st, throw in Christmas. A couple of curly ones there. Existing advisor pathways, if you do manage to get onto the ASIC Financial Advisor Register by the end of this year, that's great. You then have to work out what your pathway is, and that will be determined by where you start. And it really all comes down to your current education levels. So for people who are on the ASIC Financial Advisor Register by the end of this year, but don't hold a degree, so a lot of financial advisors will hold Diploma of Financial Planning, maybe Advanced Diploma of Financial Planning. For those people, they will need to work towards a FPEC approved degree or graduate diploma by 1st of January 2024. If someone's an existing advisor as of next year and they've got a degree but it's not in a related field, and we'll go through what a related field is in a minute, they will need to complete a FPEC approved graduate diploma by the 2024 once again. If someone has a degree in a related field, and at the moment FASEA are talking about related fields as being accounting, tax, finance, economics, financial planning, law, they're the kinds of things that they're talking about here, then FASEA have basically said that they recognise that, and they will only require these people to do a bridging course, which is basically 3 units. And those 3 units are the Corporations Act, Chapter 7, FASEA Ethics, and a Behavioural Finance unit. These will all be university level units. They'll be AQF8. That is 1 unit above a degree. And if someone has a degree and a postgraduate in a related field, well, they've hit the jackpot. They can they don't have to do 3 units, they only have to do 1, and it's the FASEA Code of Ethics. Similarly, if someone is an existing advisor and they happen to have done a already approved FPEC qualification, then again, they will only have to do that 1 bridging course by 2024, and that's the FASEA Code of Ethics. So where you begin as an existing advisor will dictate what pathway you need to take. Now, I've structured or framed the remainder of this presentation around someone who already has a degree in a related field. I'll be doing other videos around people who just have a diploma or other combinations of qualifications, but I thought to set the framework, we'd start with this and then we can go from there. So if an accountant is not going to be registered by the end of this year and decides next year they want to diversify their business and get into financial planning and so forth, well, they'll need to consider the first thing is, do they have FPEC approved qualification already? Now, most likely the answer is going to be no, because most accountants who are going into that area will have most likely done a degree, an accounting degree or a tax degree or some other commerce degree, but it wouldn't have been it may not be an FPEC approved one. So if not, what they're going to have to do, they are going to be treated as new advisors next year, and because they have a degree in a related field, they will meet the requirement of basically having to do an approved degree or postgraduate, and we'll go through a scenario soon which shows you what the best option might be. Then they've got to pass the national exam, and then they've got to undertake a professional year. Now, obviously, because of their professional experience and their previous qualifications and so forth, there will be credits and different entry requirements into the different universities, but it will be a case-by-case basis across the universities, and it will also be a case-by-case basis across the individual. New advisors and accountants, again, as we talked about, they need to complete that FPEC approved qualification. The postgrad, they need to pass the national exam. So the national exam, some framework came around about that last week, and it's basically broken into 5 areas. The 5 areas that are listed there, that's the Corporations Act, the FASEA Code of Ethics, the behavioural finance unit, a financial advice construction unit, and an applied ethical and professional reasoning and communication unit. The document that was put out there something around 70 multiple choice and 5 short answer questions as a starting point. It's up for consultation. It also put out there a proposed pass mark of 65% with weightings across the different 5 areas. Again, it's up for grabs. The professional year they will have to do as well. So industry consultation around the professional year happened in June. So it's just closed, and they're really working. They had a working group together about what the work and training requirements are going to be for that professional year, because it's going to have to be a set framework. There's going to have to be guides around it. There's going to have to be a structure so that it's consistent across industry, because that's what's been lacking probably in the industry in the past. And they can undertake the professional year prior to or concurrent with completing their qualification and passing the exam. So what the information from FASEA says at this stage is the professional year, as long as they're in a role that's an approved role. And again, this hasn't been defined, but an example was a paraplanner. So someone can work as a paraplanner, they can do that for a year, that meets their professional year as they're studying. Whilst they're working as a paraplanner, they're studying towards their further education, and they can pass their exam, and then at the end of all that, they've finished their professional year, they're off and running, no dramas. So what kind of strategies can we put in place around getting into the industry or building a career in the industry if you're someone who already holds a degree? Well, let's make some general assumptions with accountants, because that's who we're talking about here. Accountants have a degree, business, accounting related, tax related, most likely not FPEC approved, because it would have been done a while ago before the FPEC rankings and kind of structure came in, but it would be considered in a related field. So what does it mean? What does it mean if I become an authorised rep this side of December, or 31st of December? And what does it mean if I become an authorised rep next year? Well, let's have a look at those 2 strategies in detail. So the first one is authorised rep, or a financial planner this side of the end of the year. That is, they're on the ASIC Financial Advisor Register by the end of this year. What does that mean? It means that they can continue as a financial planner into 2019 as an existing advisor. That means they can avail of the 5-year transition period. That means there's no professional year requirement. It gives them a little bit more flexibility as they go forward in terms of their work and their business and so forth. It means they've got till 2021 to complete the national exam. They've also got up till 2024 to complete any additional study. So it could be three units in a bridging course, which is your Corporations Act, your FASEA Code of Ethics, and your behavioural finance units. They've got till 2024 to do that. So really, what it's all about is getting on board now. So what do they need to be? They need to be RG 146 compliant, or Diploma of Financial Planning. They need to join a dealer group. They need to get it all happening. It needs to happen by the 9th of November, so they can be on before the end of December. At this stage, and again, things can change, but at this stage, there is no discussion around having the application to go and register in before the end of the year and it not be processed next year. No. You've got to be on the register by the end of this year. Strategy B, don't have enough time, I'm busy, I don't want to rush things. If I do it, I'll do it next year. So for people who want to become an authorised rep from 2019 onwards, or get on the ASIC Financial Advisor Register in 2019 onwards, then this is the pathway that they will most likely go down. They'll have no access to the 5-year transition period. They'll be considered new entrants, even for an accountant who's been working in practice for years, as experienced. From a financial planner perspective, they will be considered a new advisor or a financial advisor. What's the process that they have to follow? Well, they've got to complete an approved FPEC degree or postgraduate qualification. Because they've already got a degree, they're most likely going to do a postgraduate. We'll run through an example of that in a second to show you how it all works. Once they've done that, they can then pass the exam. So they have to do the qualification in order to sit the exam. That's the way things have been structured and phrased at the moment. It could change with industry consultation, but at this stage, qualification first gives you the eligibility to sit the exam. And they must undertake a professional year, that is, a year of supervision. What's the pathway of least resistance? Well, for this cohort, for a degree qualified person in a related area, or has a degree in a related area, the path of least resistance in 2019 is most definitely going to be a postgraduate, most likely postgraduate graduate diploma in financial planning. Based on their experience and previous qualifications and so forth, they may be eligible for recognition of prior learning, RPL, or credits. What the universities are saying at this stage is, if for someone in this situation, if they've done a diploma of financial planning, they'll get 1 credit towards the 8 credit graduate diploma. If they've done the diploma and the advanced diploma, they'll get 2 credits towards the graduate diploma of financial planning. If they've done CFP as well, or other qualifications that'll be on an individual basis, they may get up to an additional 2 credits. So that's if they've done DFP, ADFP and the CFP, they could get up to 4 credits towards an 8 credit graduate diploma. So that means it would take, normally a graduate diploma is normally 2 years part-time study. It'll take it down to 1 year. Most people probably won't get all 4, so it'll be 1 to 1.5 years to complete their study. Then they can sit the exam. So you can see, depending on the timing of all this, if someone's keen to get into financial advice or diversify into financial advice as an accountant, then they've got to understand what kind of time frames they're looking around here. It may be a year, year and a half, 2 years down the track before they can actually get on board under the way the legislation is currently written. So an example of this is the Graduate Diploma of Financial Planning offered by Deakin. I went online and just copied their core structure. That's their core units there, and then there's 1 elective you can choose. It's pretty as you can see, it's pretty straightforward and makes common sense. And it's really just designed, like most of them in industry, 1 year full-time, 2 years part-time. If you get credits, it's obviously going to reduce the time of study. It's a trimester-based offering online. Most of them are trimester-based now. Most of them have online offerings. And depending on how much credits you can get for your DFP, your ADFP, that's your Diploma of Financial Planning, your Advanced Diploma of Financial Planning, any other qualifications, your CFP, obviously that'll reduce the study time and it will also reduce the cost. So once again, coming back to this particular diagram, and as I mentioned at the start, I'll upload these slides so that you've got me out of the picture. This is it gives you an overview of where things sit at the moment, and depends on what you want to do. So it's really come to the critical time in the industry where if you want to get in, if you're not already in, you want to get in, then you've really got to start to act. If you can't or don't want to get inside of the 31st of December, that's fine. You just need to understand what your options are in 2019 and start making plans towards that. Thank you for listening to this particular video. My details are there, Joel Ronke. There's my email address as well. You can get me on 1300 400 346, or you can visit the website. I'm happy to have a conversation with anyone about their individual circumstances. I hope you can see from the video and the presentation that it really comes down to you as an individual, your professional experience and your qualifications to date, and when you got into the industry, that will dictate how you're going to go about meeting the new requirements. The thing I will leave you with though at the end is all of what I've just talked about is proposed. Now, it's proposed with a high degree of certainty. It's really the detail and the minutiae that's yet to be decided. So, you know, I think the most important thing is to just take stock. If you want to get into financial advising, then really kind of have a look at what the options are, and good luck. Thank you.